Hi guys, this is Mark Shaws in the Pattern Trader. Excuse my little raspy voice. I've got a bit of a head cold here, but I did want to chat with you about a couple things. Lately I've been talking about this concept of what I call a governing chart price pattern. So what is, in my mind and my definition of a governing chart price pattern? Now, this is a price pattern that could have occurred a couple of weeks ago, a couple of months ago, or even a couple of years ago. And when we see these patterns, basically we understand the direction that that instrument is going to head in once we see this governing pattern. Now, it could be a double bottom. And so with the word bottom in it, that chart pattern basically indicates that that market will traverse higher over time. Similarly, if we see a double top like we saw in dollar versus Japanese yen 5 years ago at 126, we understand that that market by and large will head lower. And today we're trading about 109 down from the 126 level in dollar yen. Now, the big governing price pattern that I've been talking about for actually many years now has been in the British pound versus New Zealand dollar trading pair. Now, late 2016, early 2017, I saw this governing chart pattern emerge in pound New Zealand dollar, where we got a huge bounce from the low around 165, and then we had a retest of the 165, and then by March of 2017, that pattern basically had formed. It went through what I call the neckline, and it confirmed this double bottom price pattern, which effectively to me meant that that pair had bottomed. And that's exactly what we've seen. In 2016, the British pound versus New Zealand dollar bottomed around 165, and today it's about 4,000 pips higher, just a few hundred pips off its multi-year high at 205. Now I'm going to go with the chart patterns in live and show you exactly what I mean. I'm going to analyze the chart live and show you exactly how I observed the double bottom in pound New Zealand and how it's directed me going forward. Now that's not to say that you're not going to get huge consolidation periods or you're going to get sell-offs, but I understand when you get these counter trend moves. I understand how to play those, but once you see a consolidation, then you understand that when you get these sell-offs, they're actually opportunities. So a couple of weeks ago, pound New Zealand dollar went to 205, and then it dropped to 195. 1,000 pips. That's a pretty hairy ride on the way down. But I actually just started nibbling and taking shots at the long side, and I looked at that as an opportunity because I understood what was below that, what the governing pattern was, and that ultimately that this pair is going to traverse higher. So now I'm going to show you on a live video exactly what I'm talking about. This is a live chart of the British pound versus New Zealand dollar. This is a weekly chart, and as you can see, for the last couple of years, you just see this up and down pattern in the pound versus New Zealand dollar. And sometimes it's hard to make out heads or tails where something is going like this. And so in my video just a moment ago, I made mention of what I call the governing pattern. So you can see in this sequence, the pound versus New Zealand dollar went straight down. It was in a straight down trend. And as all good things must come to an end, so do trends. And so when I saw this behavior right here, this double bottom, which is exactly what it sounds like. This market made a new low, bounced off the low, retested the low, and when it came through the neckline, it basically confirmed this governing pattern. And when I say the governing pattern, I mean that this double bottom is the pattern that has been driving prices by and large for the last 3 years in pound versus New Zealand dollar. And it was at this time, right around the time when we hit 167, that I said this pair was going to head inexorably higher. And we can see now that we're almost 4,000 pips higher over the course of the last 3 years, despite the fact of these up and downs. And so when I see what I call these governing patterns, it gives me confidence to get on the right side and in the right direction. Now, just like all trades that breach a neckline, typically we see a retest, and in this case we had a rounding bottom. So you had effectively this double bottom with the rounding bottom and the neckline at around the 180 price level. So whereas this 180 price level was old
resistance, it then became new support, and then you can see in a more recent time frame that we had another double bottom governing price pattern in the pound versus New Zealand dollar. Now, as my members know, not only do I hone in on the pattern, but I look at the price action within the pattern. And you'll notice that all these times, and this is, remember, this is a weekly chart. So in this price action, the pound New Zealand made an absolute new low, and then by the end of the week it closed 1,000 pips on the other side, indicating the direction that it was going to head. And it was at that time when I saw these two price levels at the 165 and the price action, I started telling my members, be prepared for a huge turnaround in pound New Zealand dollar, which is what we've been seeing over the course of the last couple of years. Now you can see this price action here, made a new low, closed on the high, made a new low, closed on the high, and it was at this juncture I knew that it was going to be a rocket ship, and me and my members made over 2,000 pips on this run-up. Now you can see the same price action at this double bottom right here. Made a new low, closed on the high. Even though the bar is red, we can see that it closed much higher, closer to the high than the low of that trading range. And this is what I focus in on, both the pattern and the price action at very key inflection points. You can see now at this double bottom juncture, made a new low, closed on the high, and it was at this time that I sent out an email for our members to start getting long at the 186.92 level. And this was the email that was sent out on August 6, 2019. Now, this was 3 months ahead of the Brexit resolution. At that time, we had no idea what was going to happen with Brexit. Hard Brexit, soft Brexit, no Brexit. There was absolute chaos in the markets. But to my mind, the market is the ultimate voting mechanism, and you can see here this double bottom with this key reversal price action led me to believe that we were at an important bottom. I sent out an email to our members to buy it at 186.72 based on a double bottom price action. You can see just a few days later, on August 19th, I was advocating to add to our positions at 189.57 based on the observation of this giant coil after this double bottom price pattern. So again, this double bottom was my governing pattern, and despite the fact that we were backing and filling what I call inside bars, because you can see all of these price bars were contained within the bar indicated by the green arrow, to my mind, once it broke above that, it was just going to inevitably head higher based on the governing pattern of this double bottom and market coil. And again, almost 10 days later, instead of dumping out of my positions when I had 500, 600, 700 pip profits, I was looking to add to my position. I was going to buy on dips, breakouts, anywhere. Again, you can see this double bottom, inverted head and shoulders. This is my governing pattern. So when prices go crazy, they go up and down, I basically have faith that the governing pattern is going to get me to where I want to go. And at that point, I said, this is going to go higher, but I just don't know how much volatility will occur before pound New Zealand heads higher. I'm taking a buy an HODL, hold on for dear life, long-term approach. And after that, pound New Zealand dollar went to 205, 1,200 pips above this recent add. This is a snapshot of my trading account when I took a series of those trades that I just showed you that we sent out to our members. I took those trades and ended up bagging well over 7 figures in the run-up from 186 to 205 in pound versus New Zealand dollar. Now this is where it gets interesting. After I saw this double bottom at the 186.72 area and started piling in my trades right upon observation of this key reversal here, after this run-up to all-time highs, you can see pound New Zealand went to re-challenge the all-time highs around 205 on that run-up just a few weeks ago. You can see, consistent with how markets go, once they go to certain resistance levels, they will hover or set back a little bit. But if you understand the governing pattern, and again, just to reaffirm, when we see these patterns, these are the patterns that are going to dictate and govern the price action in the market. I'm always asked, do you pay attention to news or events? Well, you can see that this was back in 2016. David Cameron was still in position. Then it was Theresa May. Now it's Boris Johnson. We had Brexit. We had no Brexit. We had all kinds of chaos. But you can see the market was starting to work through that chaos. And the market is the ultimate pricing function. And once I saw this double bottom, rounding bottom, I knew that the market was telling me that this thing was going to go higher, which informed me every time I had a good break that it was time to actually buy this thing. So when I see a break from 205 to 195, again, if we put it in context, let me just get rid of some of this nonsense on this chart right now. So here we observe this recent double bottom with the neckline, and a neckline is simply a line that is drawn through the pattern. And you can see just as we shot through the neckline right here, markets have a propensity to retest that neckline. And when they retest it again and get going, that's when the trade is real. And you can see, despite the fact that we broke from the 205 area to the 195, 1,000 pips looks scary, but you can see all during this time it was hovering well above all of the lows, and this was just a consolidation. But if you're just looking at this on a 5-minute chart or a 15-minute chart or even a 1-hour chart, you cannot put this into perspective. So in trading, you have to know the cards that you're holding. Trading will get uncertain. It will create doubt in these periods. But if you understand the shapes that govern the ultimate destiny in these trades, it will help you sort through all of this chaos and understand it was just an opportunity. And when I saw this thing coming down here, to my mind, it was just an opportunity to start taking a nibble on the long side, and now you can see we're hovering almost just 100 pips off of all-time highs, and this is ready for an immediate blast off. Now, just to show that I put my money where my mouth is, I just want to show that every time we sold off, I was buying pound New Zealand. I was taking a nibble at 199.71, at the 204, the 201, the 200, and then at the 202, 202.95 recently. I've been holding this pound versus Australian trade for over a month now, and have a nice profit just holding that. Now that's gone up and down. It almost went from $80,000 profit to zero and back again, and I'm just holding this for the long term. Now some of you will notice that I have nothing for the stop loss and take profit, and so I am not advertising this. When I look at a governing pattern and I understand that the trade is going to get me there, I don't get frightened by reversals, even if they're 500 pip reversals. I put that in context with the long-term chart as I just showed you. But again, I have an understanding of my own personal risk, and you should do that too. So don't just automatically do what I say. Understand what you're doing. Understand what your risk is when you're trading. I hope this video added tremendous value to you, and I will see you next time. Have a healthy and prosperous trading day.